Thank you, Kevin. Good afternoon to all. We're here to talk about shipping tax in Cyprus. And it's good to remember that Cyprus has been applying the tonnage tax system since 1963. It has evolved over the decades and is today fully compliant with the state aid guidelines on shipping promulgated by the European Commission. With me, we have Antonis Taliotis, tax partner at Deloitte, and we will be talking quickly through the Cyprus tonnage tax system, which is widely known to you, and then we'll be moving on to the Pillar 1 and Pillar 2 tax systems, which are coming into play. Antonis, can you briefly explain what are the prerequisites for taxation of shipping activities in Cyprus and which categories it includes?
Thank you, Michael. I think this question is, the answer to this question is well known to most of the participants, but just for the sake of replying, obviously the major characteristic or criteria that applies to all owners, charterers, and ship managers is that we need a qualifying vessel and we need a qualifying activity. For owners that own Cyprus flag vessel, there is no other criteria. They come automatically under tonnage tax, and they don't have the right to elect to be taxed otherwise. For owners of EU flag vessels, as well as charterers of EU flag vessel, they need to make an election to come under tonnage tax, and that's really the only requirement. There are some specific requirements for charterers, but in the interest of time, I will not elaborate on those. Owners of mixed fleet, they have to own or charter at least one vessel that flies an EU flag, and all the third country vessels have to comply with international standards and the EU maritime law. With regards to ship owners, the requirements are a bit more demanding. They need to have, they need to provide basically what is described or defined in the law as qualified ship management activity, that is crewing or technical, or both of them together. They need to have a fully fledged office, adequate number of staff with relevant qualifications, and the requirements in terms of numbers and qualification depend on the number of vessels under management and the type of ship management services that are offered. In addition, all the vessels they manage, they have to comply with international standards and community law on maritime. Basically, these are the prerequisites for somebody to come into the system. Very briefly, there are some specific requirements and criteria which we can look at if somebody wants to discuss this either after the end of the conference or during the questions time.
The eligible persons for the tonnage tax system, does it include Cyprus companies or also foreign companies? And in case it's foreign companies, what nexus is required in order for them to qualify for registration under tonnage tax?
Well, the nexus basically is the tax residency rather than the incorporation or the location of the applicant. With the exception of owners, who can be natural persons, charterers and ship managers have to be companies, and in order to be eligible for the election, they have to be tax residents of Cyprus. This applies also to ship owners of EU flags and mixed fleets, but does not apply to owners of Cyprus flag vessels, because those come under tonnage tax automatically.
But when it comes to owners of a mixed fleet of ships, where they have a certain percentage of vessels under the 60% threshold, there's an additional obligation for the tax residency. and the law comes and imposes certain criteria, either at board level or at operational level. Can you elaborate on this a little bit?
Yeah, basically what the law requires is that the commercial and strategic management of the vessel is exercised from within the European Union or the European Economic Area. The law itself does not define the two terms, but the Deputy Ministry of Shipping has defined the terms in a guide that has been issued. And basically with commercial management, they basically cover all the operational matters that represent the day-to-day operation of a shipping a company. That includes route planning, includes receiving cargo bookings, the crew management, including the training, the technical management of the vessel, and basically these type of things that the operational guys are carrying out on a daily basis. With strategic management, we're talking about more senior, more serious decisions, including, for example, decisions to make a major investment or dispose, let's say, a vessel, a decision whether to pool a vessel, the decision whether you want to go into a strategic alliance with somebody, where to award significant contracts. Basically, these are the decisions that normally the board of directors will take, and it's not a routine day-to-day decision making.
But under the law, it requires both strategic management and control. So both elements have to exist for an owner of for a mixed fleet of ships to be taxed in Cyprus.
That's true, Michael. Our law requires that both are exercised from within the EU, and we will see some differences later on.
With the Pillar 2, yeah. Okay, yeah. And how is the tonnage tax calculated? On what basis?
The tonnage tax system basically ignores the profitability of the shipping enterprise. It taxes these entities on the basis of the net tonnage in units of 100, based on a table that is included in the legislation. The only additional reference I can make here is that the rates that are applicable to ship managers are 25% of those that are applicable to ship owners.
And one last question on this topic. Is it easy to become a tax resident of Cyprus, a foreign company to become a tax resident of Cyprus? What's the practical procedure done with the tax office?
Well, the question from a Cyprus tax perspective is easy to answer. All you need is to have the management control at board level in Cyprus, which means in practice majority directors, board meetings taking place in Cyprus, decision making being happening here. From an international tax perspective, though, things might be a bit more difficult, and we will see later on when we touch upon Addend 3 that there are various domestic anti-avoidance rules in almost every country now to look behind this procedural or artificial, let's say, arrangement. They will look into where the company is really managed to decide on the tax residency.
Yeah, okay. Now, Pillar 2. Pillar 2, as we know, is a new set of tax rules which are coming into force. We are expecting, I believe, from this year, some guidance from the tax office. The Ministry of Finance is going to issue some circular on how this is going to be applied in Cyprus. But in the meantime, it's still work in process. Now, the Pillar 2, as I understand it, is a tax that is aimed at setting a minimum benchmark of taxation of 15% globally, or at least the countries members of the OECD to tax their businesses with a minimum tax of 15%. And the threshold for those companies to get into this Pillar 2 scope is to have a turnover of 750 million euros, correct?
That's correct. The Pillar 2 applies to all companies or group of companies that have a global turnover exceeding 750 million euro. And those groups that fall within this threshold will have to pay tax on its profits at the minimum rate of 15%, irrespective of where these profits are generated. And not only the OECD member countries and the EU member states, but virtually everybody will be forced one way or the other to apply these rules. Because if you don't apply the rules, then somebody else along the group structure will pick up the tax. So there is no escape unless you fall within the exemptions, but otherwise there is no escape. The profits will be taxed at 15%. If it's not in the country where the company is located, it will be either at a higher or at a lower level of the structure.
And we know that shipping is exempted under certain conditions. Can you elaborate on those conditions?
Yes, basically there is a definition of shipping within both the OECD model guidelines, model rules, as well as the EU directive. The definition is not something that is unusual. It talks about transportation of passengers and cargo. It talks about certain types of chartering. It talks about pooling of a vessel. But it does require that the company that claims exception of its profit under Pillar 2, it has to exercise its strategic or commercial management from the country where it is located. So that's a difference to what our domestic tonnage tax law requires, which refers to strategic and commercial management, and that can be exercised from within EU and European Economic Area. In the case of Pillar 2, it's either or, but it has to be exercised from the country where the company is located. So more relaxed with regards to what is supposed to be done, more restrictive with regards to where from it should be done.
And the ingredients of strategic management or control are the same, similar to what the ingredients are of the Cyprus tonnage tax system?
Yes, it's very similar, if not identical. They are even more elaborate, I would say, than ours, but basically it's the same definition.
So what we need to ensure is that the explanations or possible better guidance from the Deputy Ministry of Shipping is to clarify the strategic management and control, how it's applied and in what way. So we don't have any conflicts.
No, we don't have a conflict. The definition as it is found in the guidance issued by the Deputy Ministry of Shipping is basically not exactly the same, but very much alike to what is included already in the Pillar 2 documentation. So I don't expect an issue with that.
Okay. Anything to talk about the Pillar 1? It's still too early, and the threshold, I think, is 20 billion turnover, which only a handful of companies will fall into the scope. But do you think there is anything to look at in terms of shipping, especially for the very large shipping companies?
Well, I think that the major concern or finding, let's say, from looking into the documents that have been published is that in the definition of shipping income within Pillar 2 model rules does not explicitly cover ship management. Surprisingly enough, ship management is not even included in the EU directive with which Pillar 2 will be implemented within EU. And I find it a bit strange, on the one hand, the EU including ship management in its own state aid guidelines for the maritime transport, and at the same time excluded or not mentioning it in the Pillar 2 directive. We don't know how this inconsistency will be interpreted and applied in practice. As you said, it's very early stages. Implementation will start next year. So this is something that we've been looking and following, see how it will be applied in practice. But obviously it's an area that we found ourselves surprised that it was not covered by at least the EU directive on the matter.
And when we talk about ship management, I think we have to distinguish between in-house ship management, okay, or part of a group, and third-party ship management. That is a company offering ship management services to any third party against a fee. So can you discuss a little bit about this?
Yes, obviously, if we're talking about in-house ship management, for which basically you manage your own vessels, there is no income generated there, unless, of course, you are using a separate company. But the issue that we've been discussing will affect third-party ship management mostly, if not entirely.
Let's talk a bit about the Unshell directive of the EU. I mean, that's you're smiling. That's an issue which we have to, let's say, just go quickly through it.
Well, this directive is another problematic piece of legislation that they are trying to agree upon and introduce for at least a year or two. Various versions have been exchanged. They still can't agree on the provision, but basically the justification behind or the roots behind it is that they are trying to impose reporting requirements and deprive tax benefits to companies that they don't have what is described as adequate substance in the country where it is located. The good thing about shipping is that it will only catch companies that more than 75% of their income is derived from what is defined in the draft directives, at least as relevant income. And within the relevant income, they include basically all forms of passive income, such as interest, royalties, dividends, or charges between group companies without any commercial reasoning. So shipping, real shipping activity will not come under the relevant income, and as a result, I do not expect that the implementation of ADAT 3, which despite the current problems, I think it's a question of when rather than if. I don't think it will affect the shipping industry at all.
So is it fair to say that the word substance, which seems to be the foundation of maintaining tax benefits, is described strategic management or control? Would either strategic management or control satisfy the substance requirement, looking at it from the opposite?
I would link substance with commercial management rather than strategic management. Strategic management, it can be anywhere in the world. Now we've been hearing about remote working, Zoom, Teams, and so on. But the real operation on the ground is linked with the commercial management rather than the strategic management. So that's what I would expect, that substance will require. Office, people, real business being done in the country where you claim to be a resident.
And one last question from me, Antonis, is the offshore jurisdictions. How do you see them in today's world within Europe? I mean, how do they fit? Can they fit in some way? We know that, for example, in Cyprus, a foreign company may enter the Cyprus tonnage tax scheme by becoming a Cyprus tax resident. Okay, but how do you see their future going forward?
Well, obviously, I'm not a fortune teller, but we see a trend. The last maybe 5 years, we've seen more changes in the tax world than what we have seen in the previous 50 or 100 years. So they are moving very quickly. They are tracking artificial structures from various angles. So I think that surely substance is something that everybody should be looking. And the time when you were simply setting up a brass plate company to exploit a country's tax system, I think they are over. Shipping, though, it's a different industry. It operates slightly differently. So, and we have seen that in all these anti-avoidance rules that are coming into play, whether that's Pillar 2 or Unshelled Directive or whatever else, usually shipping is excluded because of the specific way it would operate. But irrespective of that, substance is something that everybody should consider going forward.
And I think just one last comment is that we can safely say that shipping enterprises using Cyprus as a base are in safe hands.
It seems so. It seems so. At least there is nothing too worrying in what we have seen so far, apart from the issue for ship management that we mentioned, but that would only apply, at least for now, to those groups that earn more than 750 million euros turnover.
Thank you, Antonis.
Thank you very much. Is there a question? We have time for just one question, perhaps? Yes, sir.
It's time for free tax advice.
Thank you. Yeah, it's an opportunity to get some free advice from a lawyer, which is quite rare, actually. Two quick questions. Can you just say a little bit about how the tonnage tax system works for new buildings, firstly?
In what sense?
Well, because the way that you described the way that it works, are there different rules? At what point does the tonnage tax apply when a new building is being constructed?
I think it's a simple answer that so long as there is no income being generated by the new built vessel, there's nothing to tax. And therefore, until the ship becomes a ship and it floats, then you have no ship. It's just a contract. So you have to wait until delivery, and from then onwards, the vessel does enter the Cyprus tonnage tax scheme, and any earnings, of course, are subject to the tax rules of Cyprus.
So then it's related to when the ship actually becomes in operation?
Yes.
Okay. And the second question is, we're talking about the environment today and green issues. I think there are some incentives, aren't there now, under the tonnage tax system for green ships, environmentally friendly ships. Can you say a little bit about that?
Yes, the Deputy Ministry of Shipping has advanced a number of proposals and solutions for green ships. I think it's a very strong signal to shipping that Cyprus wants greener ships. So it's not just the monetary side of things, it's just a message being given to the industry that we want green ships in Cyprus, and that's why we have these incentives.
Thank you very much.
Thank you. Perhaps one more quick question? Anybody? No? Then I think we're good. So Antonis and Michael, thank you very much.
Thank you. Thank you.